Okay, it's Masters Week, and they're not holding the Masters this year because of the COVID-19 problem. So we went out to Georgia, Augusta, Georgia, to see if we could do our show from the course since nobody was on it. And they said, sure, go ahead. And they set us up here on the 12th tee. And it's such a nice day here. It's too bad they can't hold the golf tournament. But anyways, at least we get to do our show from here. And today we're going to talk about the fact that up is down and you got to get used to it. It's just the way it is, right? So McDonald's, for instance, came out with same-store sales the other day, and they're down 22%. Seemingly bad news, correct? But the stock was up 4.5%. Costco's been just killing it. Same-store sales were up 10%, but the stock is down 2%. So you got to get used to this because it's going to happen a lot. Seemingly bad news is, I don't want to say it's outright good news. I'm not going to go that far, but I'm going to just say it's not relevant. And there's a few reasons for that, and I want to hit on a few of them. So the first and most obvious reason is investors try and get ahead of the curve. Right? Like, stocks are down. Let's go ahead and buy it. We know this is a temporary thing. How temporary, we don't know. How fast it come back. But at any rate, it's a non-event. We've already priced it in. Okay? So, I'm really thinking about the investor that hasn't really done this a lot and see something like that and they must go, this is so counterintuitive. It makes no sense. How can this possibly be the way it works? And it doesn't always. There's just certain times when the market just flips on its head because of something unexpected like this COVID-19, and it seems like up is down and down is up, and it's not quite like that, but they are looking past this temporary issue. McDonald's is still a great company, right? So is Costco, mind you. So why would Costco be down on up? Well, it's already old news. Like before it even hits the wire, everybody knew Costco was going to have a good quarter. All you had to do was, look on the TV or go to a Costco, and it was going to be a great quarter. It's pretty obvious. But it's old news. Okay. The second thing to look at is the fact that stocks are the leading indicator. There really is no indicator that can lead stocks. It's the other way. Stocks always are the lead. Now, it doesn't mean it always gets it right, but it is the best indicator for where the economy is going, and it truly is the leading indicator. It would be wonderful if there was another leading indicator and you could just follow that and then buy stocks based on that. But it just doesn't work that way. The stocks are the leading indicator. The market as a whole, as a collective intelligent body, is saying that the economy is going to be fine when we get through this COVID-19. Okay? So I would say maybe there is a slight leading indicator right now, and I think we experienced a lot of it over the past weekend, and it's April 9th, so I'm talking about the weekend before. If you recall, the week before, it was a terrible trading week. Numbers on the COVID cases were just brutal, especially New York was just skyrocketing in exponential fashion. And then the weekend hit, and it slowed down a little bit. Like I'm not going to say it like ground to a halt, but the number of new cases were not quite as high. So, and then actually came, a little bit lower. I mean, the totals were obviously accumulating, but the number of new cases were not getting higher each day. So that was like, oh, okay. So there is a light at the end of the tunnel, and stocks opened up pretty. And I'll be honest with you, when I saw that news, like, oh, market's probably gonna go up on Monday, then that'll be interesting. Maybe I'll even buy some. But I mean, it gapped up 5% right away. By the end of the day, it was up 7.5%. I couldn't even buy that. And I have a lot of cash right now that I'm trying to find the spot. So that was a little frustrating. I didn't want to buy on a huge up day. I mean, the total market was up 7.5. A lot of them were up 10, 15. I didn't want to buy that day. And then it kept going almost every day since. Here we are 4 days later. Okay, so the last thing you want to think about is, if you're going to buy McDonald's, we got to have cash to do it now. Now everyone's sitting on cash like I am. So these other good ones that are good for this COVID-19 become a source of cash. Okay, I gotta sell something. I did okay in Costco because I got into it nicely, recognizing that it would be a good stock for COVID-19. But now I want to buy McDonald's. It's cheap, and you sell your Costco to buy your McDonald's. That's what's happening, and you'll see it every day. Like literally, it's happening every single day. Up days, the companies like McDonald's, which are having a struggle, are up. Of course, it's an up day. But you'll see the Costco's go down, and some other ones. Here, I had a little list here, so just a mini list going here. So Gildan is down today. It's an up day. Gildan has a potential drug for the COVID-19. Metro is a grocery store, down a little bit. Loblaws grocery store, down. Amazon's been stellar through this whole thing. It's down a little bit. Sanofi is down a little bit. And then Colgate's up just a minor amount. But Colgate's been a star through this. Today it's essentially a source of cash for some people to buy some of the other things that have gotten really beaten up. Here's one that surprised me, though. I want to talk about Brown-Forman. I really like Brown-Forman. It's up 4.5% today, which to me it should have been lumped in with the Metros and the Loblaws and the Gildans. It should be down today as a source of cash. I can't fully explain it, to be honest with you, but it's a good company. It's an alcohol company. They make Jack Daniels their number one thing. I think it's Finlandia as well. I know it's one of the high-end vodkas, one of the really good ones that people know. Lots of wines. And booze have been up, so that happens. Last thing I want to talk about is gold. Gold in this market has been fantastic. It's actually, I think, been the number one. I'm not 100% sure, but I can give you an example. B2 Gold is just one that I've always liked. This month alone, I believe it was up in March, but this month, April, it's only April 9th, it's up 35%. Okay, so what happens with gold, a few different things. First of all, in tough times, people tend to go to gold because it's kind of like cash, not quite, but it's a currency sort of. So people do buy gold, and gold stocks as well. When the U.S. dollar weakens, gold goes up because gold's usually priced in U.S. dollars. So just by the fact that it's a lower currency around the world, gold kind of holds its value, so therefore it should be higher in other currencies, so it goes up. It also kind of has a unique trading value, and I've said this, and I'm telling you, it's 100% sure that it trades on its own volition. It seems to be unaffected by what's going on. So like right now, McDonald's and Costco are trading kind of opposite. Like they're negatively correlated, right? Gold is not negatively correlated; it's uncorrelated. It just doesn't have. It doesn't seem to care what the rest of the market does. It just doesn't notice, which is great for a portfolio, right? So I think you should have a little bit of gold in your portfolio. So there you have it. Up is down. Oh, one more point before I go. Earnings are coming up. And you're going to see this a lot, right? You're going to see just abysmal earnings reports. But if you haven't figured that out by now, you're literally living in a cave. But you can see the stocks rise, okay? And I don't know how bad it has to be for a stock to even go down. I mean, McDonald's 22%. I'm not sure. They could have said 40% down. I still don't think the stock would have went down. Costco could have had same store sales up 30% and the stock wouldn't have went down, or wouldn't have went up. Excuse me. because everyone's convinced they know. Now, yeah, having said all that, it's never straightforward, right? Like, that's what's happening at this moment. By the time those earnings come in, maybe the market is inflated a little bit, and all of a sudden it's like, oh, maybe it's time to sell again. Like, it is not going to be a straight line. I can guarantee you that. This is not I do not think a V recovery where, we hit the bottom so far on March 23rd, and then we just V or straight right back. I can't see that scenario. I don't believe in that scenario. I still hold a lot of cash. I am nibbling when I see a company I like that is down for the day. So, for instance, I bought Intel today. It was down earlier. I bought a little bit. I like Intel. That's got to be my strategy for now. It's just this is one of the craziest times you're ever going to see. So, don't get too hung up on if you're doing better than the market or worse than the market. Just be prudent and be smart. Be methodical on what you're doing. You're going to get opportunities to buy some great stocks. All right, that's my 2 cents for the day. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.